Hey guys, welcome back to the Hub channel. My name is Brandon. We have another amazing show for you today. This is the high probability short-term live trading here with Mike Wade, where we take trades that we see in the market that are high probability trades, and we try to turn those into trades that are profitable and fast and easy to get in and out of. And you'll see what we're talking about here in a second. But we're going to be going right over Mike's last trade. Oh my, it was a great one. Obviously, you guys watched Nvidia, the way he traded that last week. We're going to be checking out the market, what's going on over there. Check out his guidebook. It's absolutely free if you haven't already. Get that thing in your pocket right now. And then we're going to be going over a current live trade that Mike's looking at as the market opens up here in 13 minutes. So let's get right to the show. Mike, get on in here. If you don't know Mike, go give him a follow. Go check him out. He is the founder of Michael Wade Trade Coaching. He knows what he's doing. Mike, I love you. Let's get into this show. How you been? How you been?
Yeah. Here you go,
there it is. There it is right there. I love that stuff. Macintosh has one claim to fame. That's it. Did you see that they abandoned their electric car project this last week? Totally. 2,000 employees. They just gave up. They can't compete. But let's get into it.
All right. I'm not going to push back on that.
But you can push back on. Go ahead. I want to hear it. Mike. Go ahead.
We do this?
Yeah, let's do the peace signs and the love, because that's what we need right now. Yeah. Oh my gosh. What are you seeing in the market right now? Let's check out the market, and then let's go over your past trade, because I know everybody's trying to hear how that turned out.
If I can stop laughing, yeah. You know, we're in this environment. We talk about this. We've been talking about this for weeks now, and we're in this very skittish market environment. Traders want interest rate cuts, and so does the Fed. But the Fed's being cautious. They're saying maybe the end of the year, maybe cautionary, yes, and the markets are waiting for any bit of news to suggest the Fed may cut sooner than later. If the news suggests that, markets pop up. If the news suggests that perhaps Fed's going to wait later in the year, then markets drop. And all of this skittishness, break down, break above, down, break above, all of that is moving the market like, I say a cat chasing a laser pointer. It's just like any tiny bit of news can move the markets. And today we got there's a graphic on this. The Fed came out, the Fed favorite, actually, this is I almost said Greenspan, man. That's how old I am. Powell's, Fed Chair Powell's favorite indicator is called the personal consumption expenditure index. It's like the CPI. What does it mean? It's how expensive stuff is for us as consumers. And that came out as expected. So it was a benign report. And Brandon, I want to prove to you that in the moment that report came out, this is a chart of the spies, and this gray area here was last night, and this light blue area was this morning. So the market's like PCE came out flat as expected, and then boom. So right there you can see it in a 15-minute bar that these reports are so important. They move the markets. Usually it's just for a day or two. But, that's what we're in. So I would say, despite all of that, Brandon, that the trend is quite clear, right? I mean, we're rising. The markets are rising in a nice little channel, higher highs, higher lows. We've got support here at 500 on the SPYs, which correlates to 5,000 on the S&P 500. So, Brandon, my call is up. I think we'll stay above 5,000 for the foreseeable future. So I think it's a bullish market with a lot of skittishness.
Yeah, at first, I was a little concerned watching the market move into these this high territory, but you got to remember inflation's a factor here when you're looking historically over the S&P and stuff. And really, I mean, we are hitting above that 500 level or 5,000 level, but it's not that far extended. People are like, oh, we're so far above everything, but it's really not once you account for inflation and everything else. So I agree with you. I think I see higher highs coming. more
Yeah, I
often.
would say,
Here.
I'd highlight what you said. I mean, it's a nice, healthy trend. We have a run up
Yeah.
and a little pull down, run up, pull down. That's a healthy run.
Yeah.
And there's really a nice channel here of higher lows and higher highs suggesting further upside. Just basic technical analysis suggests we go up. And eventually we will get some rate cuts, and the market is trading into that. So I think we're in good shape across the markets. And that's the case across the other markets as well. The NASDAQ, the Russell 2000, the diamonds, the Dow, all of them heading in a bullish trend. So I think we're bullish, but I don't care. I don't really care.
Same thing. I don't. Yeah, that's the thing. You don't care, and that's a great segue. Let's talk about your last trade and why it doesn't even matter what the markets are doing.
It doesn't matter. So remember last week I was singing that song, Lydia, oh, have you seen Lydia, Lydia the tattooed lady? And I said, have you heard of it, Brandon? You said no. One of our listeners informed me that it was Groucho Marx. Do you know who that guy is?
Well, I do. I have no clue, but I know it was written. I found out because somebody emailed me as well, and they said that this was something that was written back in the like 1200s or a long time ago, back in the UK, right? Type of thing. And so I have no clue.
Anyway. The reason that I brought that up is because when I see Nvidia, my little mind goes, Nvidia, oh, have you seen? So I have to deal with that, and it just came out last week. So I apologize for the distraction, but that's what I deal with inside my brain. So what happened here was Nvidia, this was the day we got in the trade, right here. And Nvidia came out with stellar earnings. In fact, one of the analysts called the earnings eye-watering. They were so good. Nvidia popped up. We got in the morning, right about here. This is a risk graph, tools I use to track trades, so I can see visually. That makes sense, right? See visually where my profit is and where my risk is in this trade. So we sold this spread for 35 cents. We did it twice. So we netted 70 cents with a max risk of 430. That's how credit spreads work. We're going to do one here in a minute. There's a guide if you want to learn about them. So exactly, we gave ourselves a shot of making 16.28% with exceptionally high probability. And what happened then was the stock, we got in at 35 cents. The stock ran up. In fact, Brandon, I want to show you the exact orders that were filled. So we got filled for 35 cents on this spread. We bought half of it back. What's that, like 40 minutes later? So we bought one of them back 40 minutes later, and then the other right about, that would be 2:20 Eastern time. So that's a 4 hour, so half of it came off in 40 minutes, the other half in just over 4 hours. So this was a 1 day, not even a day, 14.8% return on investment. That's 3 in a row, Brandon. The past 2 trades were in and out in the same day. Now, that's not particularly, that happens. It's not normal. It's don't expect it. But if you can catch these trades, these stocks, when they blow out earnings and raise future guidance, or vice versa, they miss earnings, they lower future guidance, the probability of the stock moving the other way is very minimal. So it's high probability, like a sniper shooting from well away from the action. It's why I call it snipers.
I've watched you trade these last 3 times, and like you said, every one of them's a winner. Everyone has come out day of, and really good percentages. I mean, I think 10% in a day is great. 14% incredible. I think even 5% in a day, if you were to annualize that, you would be crushing any index out there. I think you might even. I was going to say you might even be beating crypto, but I doubt it. So here's what I'm saying here. Yeah, that's the only thing you're losing to. But this is, I mean, your trade approach is incredible, Mike. And I know that you keep highlighting the fact that it's rare that you're getting this many good trades in a row. And I think it is important to mention that, because people need to know that this isn't 100% all the time. There are losers out there. But the way you set up your trades, the high probability makes it so it's easier to pick winners and get winners just because of everything that you're seeing. So as the market is getting open, why don't you set us up for today's trade and what you're going to get into here?
Yeah, this is Okta. We have a little graphic here. This is Okta, and this is classic. This is the ideal sniper setup. So it's an identity management company that allows you to manage all your apps with one login. I need that. One of the things I have the hardest time with in my life now is remembering all my passwords for all the things I'm subscribed to. But this is Okta, and they came out and they blew out their earnings. They exceeded earnings. When I say blew out, that's what I mean. And they raised their outlook. And there's another one I've never seen before. Bank of America double upgraded the stock this morning after the announcement. And I'm going to draw. So currently, let me show you with the Hub software here. I'm going to take you to a 15-minute bar. And so let me show you what's happened. What's going on here is that yesterday, before the announcement happened after the close, Octa was trading down here. And then after the announcement, Octa gapped up. It was trading at about 87.50, and now it's dancing with 107. That's post-market. The market opened again. This is pre-market. The stock wants to go up. The stock wants to go up and probably doesn't want to drop. So lines in the sand are, the way to think of them is you draw a line where you don't think the stock's going to make it back to. Not even back to, but below. And so when we take a look at this line in the sand at 90, and this is what makes this one exceptional in terms of the line in the sand. The last time, here's 90 right here. See, this is called a resistance level, and it just didn't want to get above 90 since way back here, August 22. So that's a multi-year high, and today the stock's trading up here. So this is my line in the sand that I want to go after this morning. And we have 2 minutes. It's good because I want to put this order in before we start. And so basically what I want to do is I want to put on a trade that makes money anywhere below 90. And I want a minimum of 10% for it. And I want super duper fragilistic expialidocious high probability. Like sniping from a distance, you're probably not going to get shot back at. So that's the idea. And Brandon, I've got the trade staged because I want to get this on pre-market. We've got a minute or so before the market opens, so I can slow it down a little bit, Mikey. I'm in a simulated thinkorswim trading account. I'm not taking this trade myself. I don't do that. But what I'm going to do is simulate this trade. And here's the trade. We want to sell an Octa March 8, 90 put, and we're going to buy the underlying put at 89. Now, I think, Brandon, we should be able to get 35 cents on this. Maybe not. And I'll take 10 cents. We're going to get a good credit on this one. And the stock is trading at 107. So in other words, you'll see it in a minute when the market opens. The stock's way up here. On this great news, do you think it's got much of a chance to get back down to 90? Doubt it. So let me hit the send button and have this sitting there as the market opens. And this is why, Brandon, we do the show this early in the morning, is because we want to try to catch the open. And, it's like a feeding frenzy. This is really good news. Option traders want some options on Octa. That's what they want. And they all come in at the open. We're off. And now I'm going to see what this credit actually will be once the option market opens for Octa. Sometimes that takes a little bit of time. Looks like it's dancing around here. That's not a real price there. If I could get 99.50 on this, that would be fantastic. That's like a risk-free trade, 50-cent risk trade. All right, so it's dancing around, and we got to be a bit patient here. And let's go back into the Hub software, and let's find the stock here. Let me pull up my chart. There it is. So there's the stock, and I'm asking for 90. I may have to lift this up a bit. I'm going to do that cautiously. I'm watching the stock, and the stock has gapped up. I know it's hard to see. Let me see if I can zoom in a bit more. There we go. That's a little easier to see. So the stock has gapped up, and it touched a new high there, and now it's coming down a bit. And if it does come down, then the credit for this 90 put spread will increase. So now I'm going back to the software, And I'm noticing here that the market makers are keeping the slippage really wide and not taking any orders currently. And so I can just sort of be patient, which is probably the hardest thing here, is to be patient. You can see the bid-ask spreads are quite gargantuan at the moment. Looks like we might not be able to get a credit on this one. And so my next choice then is to either put the credit spread closer to the heat, move it up, or sell more time. And so actually I see 8 cents debit still. Let's go out to the next expiration and see if we can get some credit there. It shows a mid price of 55 cents. So what I'm doing here is, because I couldn't get the 10 cents I wanted for the March 8th, I'm going out another week to the March 15 so I can get more credit. It shows 55 cents there. I'm going to see if we can get that. Actually, I got the wrong trade here. Let me flip this around here. If we go to 91, there's 56 cents. Let's go down to the 90s here. And what I want to do here is, again, position the credit spread at 90. I'll come back and explain all this in a minute. Now, there's 5 cents credit there. What if I go up one more point? Now, fast game, I know there's a lot of moving parts, and I'll come back and explain, but I want to get this. Let's go up to 91 and 90. So I'm lifting the credit spread up. And it's showing a 91 cent credit. That's probably not going to happen, but why not ask for it? Let's see. $91.01. You know, Brandon, right now the market makers are really trying to take all these orders like a feeding frenzy, and the pricing is all over the map.
Yeah, you say this every time that, and I just mentioned, because this is when market opens too, this happens more. And
Yes.
the pricing is like like an accordion. It's just up and down everywhere. So we watch you try to fill these orders every time as you try to get your exact limits in there, and this is just normal. So we'll just keep watching.
Yeah.
This is cool to watch, Mike. I like this.
Yeah, we can let this sit here, Brandon, and maybe we could take a few student trades if anybody has any stocks they're looking at. And I'm going to let this sit. By the way, I've got 2 orders on. I'm fishing for 2. Don't do two at once, but I just want to see if we can get this March 8, and then we have a March 15. That's an extra 2 weeks. This one's a little higher at 91, and what that means is that my line in the sand is 1 point higher, a little bit higher than 90. I wouldn't go any higher than this point here at this stage. And let's see what that price point is. I wouldn't lift my line in the sand any higher than 92. I would take 92 on this as well. So you could sell the 92, buy the underlying, look at March 8, March 15, get in, get out. All right, so we're going to let those, we'll call them lines in the water. We'll let them sit there and see if we catch a bite.
Catch a bite here. We watch this, and then you get this fill here, so we'll just kind of wait patiently as we wait for this to happen. How long do you anticipate this trade being on once we get this thing rocking and rolling? Do you think it's going to be another quick trade, pull out today, close it today, or do you think you're going to hold this one a little bit longer?
I think this could be another 1 day, or actually, given all the. Here's what I'm going to do. I'm sorry, Brandon. I'm just checking the prices. Okay. I think we can get cents on this 91. So I'm going to get that. That'll be my minimum. That's the minimum I take on these credits is 10 cents. So it's at 9 cents. I'm asking 10 cents. I'm going to let that one sit as well, and we'll see what happens. There's a good shot of getting filled on this one. 9 cents is the current, 9.5 cents. I'm asking 10. So that I will be patient with, and we just got it. We got that for 10 cents. Okay, now let me show you what this looks like, just so you can follow along here. All right, now Mikey can slow down a little bit. Okay, so what I've just done is I've sold to open the Octa March 16 90 put, and then I bought to open the Octa March 16 89 put. That's the put underneath, and that's yielded, just now filled, a 10 cent credit. And what we're going to do to manage this trade, actually, that was 91. I'm moving so fast, my memory's a bit jumbled. So now, once you're in, it's important to close the trade for a loss in the event the stock closes below 91, which is our short put strike, and then buy the spread back GTC for 10% of the original credit. Now, let me show you the math here. So we just got 10 cents on this spread. That's 11% potential. Now, again, this is not a swing for the fences strategy. It's a money ball strategy. You know, just get on base, get on base, get on base, get on base. You can do 10% every 7 days, which is about our average over the last couple of years. We've been doing this live in front of other people. Just counting that performance, 90% wins, average profit per trade, 10% every 7 or 8 days. You know, that dog will hunt, Brandon, over time.
Yeah, that's, I mean, the way you stack that up, it wins every single time. So what do you think you're going to get on this trade? What was that again that you 11%. See there? 11%.
Well, by the time when we buy it back, we'll end up with like 10% or something like that. But 9-10% in that range is what we'll end up with when we put. So basically what I'll do next is put on a GTC order, good till cancel order, to buy this back for a penny, netting 9 cents on the trade. Yeah. Times the number of contracts. You know, you size them up, of course, to handle whatever position size you can handle.
Yeah, exactly. Yep, exactly. So you make as much as you want, and 10% in a day is not too shabby at all. I look forward to seeing how this thing plays out. Were there any stocks that we don't have any in the chat, were there any stocks that you wanted to maybe touch on that you're looking at? We have a couple minutes here. And maybe tell us why you might be looking at those as they're coming up, because I think that insight is pretty valuable for everybody watching as well.
Yeah, there's a list here that I look at sometimes on CNBC, and Snowflake, the cloud company, sank after posting disappointing product revenue guidance for the first quarter. So that's not good news. That when a company announces earnings, whether they be good or not, and they lower future guidance, those companies have a lot less chance of rising after that. So I want to look at Snow. That's a potential candidate that I was looking at this morning. And let's take a look here and see what it looks like. There it is. And we can kind of go through this as a case study, Brandon. Right now, Snowflake is trading way down here. So analysts took it behind the woodshed and beat it very vigorously.
Oh, jeez.
And now you can see the stock starting to bounce off 180, and now it's rising a bit. So I don't like it when stocks do that. So what I would do on this one is draw a very conservative line in the sand. I would say no lower than 210, or preferably 220. If you could get 10% by selling a call credit spread up here, the chances of it getting back up above 200, resistance, 50-day average, the red line, resistance, 210, resistance, 220, resistance. You know, there's still a really good shot. And what I would do is put a minimum order here for 10 cents, for 10% potential credit, 10% of the spread width, in other words. And that one looks really good. I would do that one. And there's plenty more. Today, the fish are jumping in the boat. There's just a ton of them. And you can go to various places and find stocks on the move. And Snowflake is one of them that I like as well.
Jeez, holy cow. Looking at that, all these charts that you pull up, I mean, this is happening all the time. This is another reason why you all need to go pick up Mike's Sniper Guidebook. Tell them a little bit about that and where they can get that, because I think that's important for them to understand what you're doing here.
Yeah, well, the Sniper Guidebook is an expression of what I want to do for people, which is to bring a system that has a little bit of a layer of complexity to it. The credit spread, in other words, is I wouldn't say it's not an advanced strategy, but it's more complicated than the basic calls and puts. but it can be mastered. And if you can master the system, then you have a really good shot of making some money. I don't know if I told you this, Brandon, but in January, in my own sniper community, I have a company called Michael Wade Trade Coaching, and we put community around people to give them a really good shot at making some money with options trading. And we launched this competition in January, 1 trade a day sniper challenge. And Brandon, 90% of people, 90% of them made money. Some as high as 15% on average, some 10, some a little lower. But those people were able to generate the same results that I've been generating, 90% wins, average gain 10 or 11% over 7 or 8 days, in that ballpark. And it's consistent, it's repeatable, and it does take a little bit, which is why I wrote this comprehensive guide. It will take you through every single step here that I'm doing quite rapidly in front of you. And then the idea is that you get the guide and you come trade with Brandon and I every Thursday at 9:15 Eastern, and let's snipe some trades together and make some money. Now, there's no guarantee you're going to make money. Systems, sometimes losses happen and you might mess something up. So I'm not promising you'll make money. But of all of the option strategies I know, and I know a lot of them, I'd say all of them, been trading the options for 25 years. There's a lot more complexity with options. But this is something Brandon, I think that a novice trader with some time and some support on the Hub channel can really begin to master this very high probability short-term profit system.
I think that's the thing that's best is if I can figure this out, I think anybody can figure this out. And the way that you're setting these trades up illustrates that very well. So accolades to you for that. And yeah, just like you said, you're not guaranteed to make money, but so far you've done good the past 3 trades here live on the show. And I know you pick out many more and you teach people to be able to pick out these trades. And it is one of my favorite ways of trading, just watching you trade. So I appreciate that as well. Mike, this is, like I said, one of the best times of my week to be able to watch you trade and crush these things. I would definitely encourage everybody to go out and get this book. Go check out what Mike does and watch us every single week. I know you guys have been watching these trades every single week, but he's been in and out. And he's been very successful. You've been crushing it with these things. And so I see this going forward. Next week, we're going to recap this trade and put on another trade. So you might as well join us. Please like the video, subscribe if you haven't already. But as for now, we will see you next week.